the things that you couldn't yesterday. So that's what we're going to talk about today. We're going to talk about simplicity a lot. Um, we're going to talk about keeping it simple, keeping it focused. You know who I'm talking to. And guys, I want to show you how not difficult trading can be. Um, how not difficult trading can be. What a concept, right? Because until you've got this core, guys, it feels difficult. I know that it does. We're going to fix that. Slowly but surely, we're going to fix that. But first, we're going to go check out news. Guys, if you are in the funding company, so Trina, I know you passed your evaluation. Guys, you cannot trade during red flag news. If you do, you'll lose your account. I think the record so far was an account with close to $60,000 in it, violated, lost. Guys, if you are in the funding company, red flag news is 100% no-go. One of you in here missed it by a second. Great job, Victor. Victor knew the rule and got out before news. Good job, Victor, paying attention. So at 9:45 a.m., guys, we got Flash Manufacturing PMI, Flash Services PMI. These are high impact. They may or may not move the market, but they have the potential to. And because they have the potential to, your advantage is gone. The patterns you're looking for may be null and void. Um, so know where it's at. Make it a part of your day. We're going to talk about simplicity today. And someone gave me the awesome idea, and I'm going to see if I can get it done. With the KISS plan, the 5-day challenge badge. We're gonna see if we can get that for you Discord users. Every day in this room, I hand you guys plans, and every day it's the KISS plan. And guys, these KISS plans, I'm gonna drop everything in the room right now. These KISS plans are stepping stones. They're beginning. They are foundations. They are really everything that you need to be successful with the software if you just learn it and if you commit to it. I get emails often. Hey, Mark, I know you told me what my challenges were in the room, but what are they really? Guys, I don't hold back from you. I won't keep you from getting all the information you need to be successful if you post in this room. So there are no answers outside of the room that are going to differ from what you hear in the room. Every day on this plan, I remind you that what I give you in this room is a stepping stone in your learning journey. It's the beginning, guys. It teaches you to read your indicators, and the trades in this plan are literally designed to optimize your chances of success, which means that Nexgen, that John Novak, that I have spent hundreds of hours and tens of thousands of pictures to prove that the patterns in these plans typically win more than they lose. That's what creates an edge. Now, very few people take our word for it, and that's great, which is why we teach the rules, why I teach you to prove that I am 100% full of beans. And if you go through it, if you keep it focused, if you learn this very simple plan as presented, you'll probably be with Nexgen for the rest of your life. That's it. Learning high probability trend trade is not the end. It is the beginning. So you will ultimately craft a plan that fits your needs, guys. You'll see things that you may want to add and adjust your plan. Until you're capable of doing that, build your foundation. And since it's Bad Analogy Friday, it's also Heckle Friday, right, Ron? Because it's Bad Analogy Friday, I made this picture and it's horrible. Guys, the high probability trend trade is my favorite recipe. This is my go-to. This is my crowd stopper. This is the in-laws are in. It's a giant party. This is what I'm cooking for you guys because I know it like the back of my hand and I know that it's 32 flavors of kick ass. Well, once I have this core, once I have this recipe, I can adjust it for the people that are coming over. But if you don't have that base, right? Um, Guys, it's going to mess things up. So stop looking for all the trades. Look for the best trades and learn how to do it best of the best. Trina said today, Hey, Mark, guess what? I passed my evaluation. And Trina, I'm just going to say it out loud for everybody. I'm proud of you. You said you did it with nothing more than a trend trade. 3 rules. That's it. That's all it takes, right? Is just 3 rules. And that's it. It's doing the same thing over and over. Successful trading is boring, guys. It's no fun to sit around and do nothing. But here's the reality. Oh man, it didn't come up on the right monitor. That would have been like the perfect segue. There we go. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is being patient. And just because you like the way an entry looks doesn't mean it's the right entry. Just because you hope the market goes in the direction you're hoping it goes doesn't mean that you have an entry. So what we're going to do is we're going to use 3 rules and 2 charts, guys, whichever platform you're on, whether it is NinjaTrader or TradingView. We're going to break down what we call a high probability trend trade to the fewest moving parts, removing all noise that doesn't contribute to your success. What does that mean? That means that even though you're staring at the highest probability trend trade that I could ever teach, giving you an edge, an advantage, you're still going to want to apply everything else that you see on your chart. You're going to want to have colors create meaning, and you're going to want to have a second lower divergence weasel its way into this beautiful plan. But guys, in the beginning, the plan is very direct. In the beginning, the plan is very concise, and in the beginning, the plan has very few moving parts. And when you learn this plan, you'll be able to adjust and create your own. But until you can do that, until you can find success with this plan, life's just easier, keeping it simple. You're going to understand through your chart reading where the market is likely to continue, go, and stop, guys. Entries, management, no more trades than 90%. And we're going to do that with only 3 rules. The methodology taught looks like this on NinjaTrader. You will be able to define a trend in a fraction of a second. You will be able to define the momentum of that trend in a fraction of a second. You'll understand whether or not there's something in the way in a fraction of a second, guys. Your read on a large chart will never take more than 2 seconds if you're keeping it concise. And then when everything on a big chart says go, we're going to go pinpoint where a fight is lost, guys. This is what the market does every day. The market goes up, and then the market fights, and then the market goes down. On a big chart, those fights just look like these little tails. On a small chart, those fights look like the perfect trend trade entry. So on NinjaTrader, it's a trend, it's a fight, it's resumption. On TradingView, it's a trend, it's a fight, it's a resumption. If you never get the fight, you're not taking the trend trade. So I gave you guys plans, and now we're going to learn the rules. We're going to break it down, we're going to look at the indicators, and we're going to keep it simple, guys. Everybody can post pictures. So if you're in the study phase, the more pictures you post in this room, the quicker you're going to get to where you want to be. The more you ask for help, the more help you're going to get, guys. There are no limits on the help that I will give you. But when you post in my room, I'm making all the pictures today, guys. If you only post your winners, you're just hurting yourself. I'm going to tell you right now, if all you show me is winners, how are you ever going to learn how to fix the losers? It's the losers that make us better traders, guys. It's the losers where we identify the challenges that are holding us back. If you say you only get winners, Wayne, respectfully, you are full of shit, and we all know it. Like being a 12-year-old boy that says he doesn't masturbate. We know the truth. We've all been 12-year-old boys. Sorry, that's crass. Post in the room, guys. Get help. And my job, and maybe one of my gifts, if you can call it a gift, is I recognize. Me too, Tree. All right, we can't let it go that direction. Guys, one of the things that I do, and I do really well, is I recognize patterns in you. I recognize the things that you're doing that are costing you success. I recognize the things you're doing that are bringing you success. And I'm very, very vocal about those things. If you post in the room, you will get a private session with me every time. When you post in the room, you're going to tell me what you saw. 100% transparency. This is on sim. Hit my 1,000 on live by 8 a.m. so I can be a little bolder, more aggressive, strong bottom, triggers rolled. And you think you're being aggressive, but you're not. You have a strong bottom. You have momentum. You take a pullback to an area inside of triggers, and damn it, you make a bunch of money, Pete. This isn't bold at all. This is so much more conservative than I've seen out of you today already. You had momentum. You had room to trouble. The only thing that could even be construed as aggressive is holding through the fib, but you didn't have any reason to exit. So guys, I love the 100% transparency, but from where you took this trade at 56 down here, you had momentum, you had room to trouble, right? So guys, every time you post in the room, we'll talk about what you see, what you did, why you did it. And if you need feedback, outstanding. I'm going to give you all the feedback in the world. If you're just showing off, I want to see that too. I want to see all the great stuff that you guys are doing with this software, but just annotate it. I'm showing off. Look how cool I am, right? The hope for new users is that you don't practice the wrong trades, that you don't get lucky, especially on simulator. Pete's at a point 10 years in where he can play and get a little silly on simulator and have fun with it because he knows it's his plan. One of the biggest challenges that new users face is getting lucky on simulator, taking that luck to a live environment, and wondering why they just got railed and lost everything in the market. Short-term victories, when rooted in luck, typically result in long-term failure. So how do we get away from that, right? Post in the room so that we can make sure that you're reading your charts accurately. And that's all I'm doing is I'm looking at your charts and I'm saying, you told me you had momentum. That's right. You did a good job. You said that the path was clear. Let's talk about clear path because you made a little mistake here. Here's how to correct it. And you'll get everything I have in me. Simplicity is what pays dividends. If you are focused on a high probability trend trade, I don't feel like opening word. If you're focused on a high probability trend trade, you are focusing on 3 rules on 2 charts. You're thinking about 5 things. And now this is for some of you. Anything beyond that 5 things is noise and it doesn't serve you. That's it. Learn this one trade. Keep it simple. And then from there, the noise begins to go away and your plan grows. So simplicity pays dividends. Everything that I teach is a pattern. You've got to learn what the pattern looks like. That's where the spreadsheet comes in that I give you. So the basic rules are on the first tab. So if you're trying to start over and stay focused, a trade isn't your desire for money or trying to look cool to the kids that smoke cigarettes down by the drugstore. A trade is nothing more than 3 rules coming together to give you this perfect pattern. So here they are individually on that spreadsheet. Here's the whole pattern presented by Nexgen users in this room. And there's ideas on management. There's the KISS plan management, giving you an opportunity to get the most out of your trades as a brand new user until you can create your own management. There's a place to put your pictures. There's a place to put every trade that you take with an area for feedback. Now, I'm going to give you guys one of the greatest things you can do right now. Accept it if you will. Reject it if you want. I'll still sleep tonight. That's not it. Every morning, I mean religiously, go back and look at what you did yesterday and ask yourself, what worked? What did I do yesterday that seems to bring me a lot of success? But then you've got to ask yourself the painful question, what didn't work? Maybe it was trading without momentum, or maybe it was early entries. Maybe It was trading in determination conditions. I don't know. If you post in the room, we'll identify it within 3 or 4 trades. That's your thing. Your thing is what you're going to have to overcome to find the success that you're looking for. And if you go through this study every morning, it's going to set you up for the day. That's my job, is to help you recognize your thing, and then more importantly, to help you overcome it. 3 rules. That's it. When a rule is met, and we're talking about NinjaTrader right now. We'll get to TradingView. 3 rules. When a rule is true, it provides an advantage. A trade is momentum plus path, and then defining an entry. All of these concepts are individual. They should be learned on their own and then pieced together to create a trade. It only takes 2 charts to prove this true. It takes a large chart first. It's a very slow chart. Sorry, I've got a hydrator in my drink and it's sour and I'm puckering every time I drink. It's like a broad stroke of a brush. It's like a general opinion of the market, if you will. On the first bar, the most current printing bar on the large chart, you will understand the direction of the market so that you can make the stellar choice to trade in that direction. And just a little heads up, you can't take a trend trade if you're fighting the trend. It'll define the momentum, that first advantage that we look for. It'll also define the areas that could be problematic or that have worked their way into the rearview mirror. Rules 1 and 2, 2/3 of your advantage, 66.66666% of the good stuff comes from 1 bar on the large chart. When the rules are true, the market is trading way down here, and you're going to get used to this. From down here, there's the fight that we spoke about, and this is called a retracement. And a retracement is nothing more than a small move counter to the underlying trend. So your trend is down. The push is up. You're going to be able to pinpoint right where that retracement is most likely to fail, right where the market is most likely to bounce, and continue in the direction of the overall opinion of the market. This is your high probability trend trade entry using a smaller, faster chart. Your core advantages come from the large chart, but by refinement, you'll be able to have less risk and higher profitability because it's going to put you in further away from those things that could stop a market. We use these 2 concepts. This was one of the most humbling things for me. I don't know about you guys. I tend to be a little alpha outside of the room. When I was in an actual business, I'm very much a leader, not a follower. So it bugged the ever-loving snot out of me that I have 0 control in the market. It really did. It affected me for a little bit. I can't make it go up or down. I can't bend it to my will. But what I can do is understand that there are forces that are in control. We're going to call them the large crowd. This is your large chart. They create trends. They establish the momentum that we lean on. And they react at the key areas that could be problems for us, guys. And the large crowd wins more often than they don't. The 3 rules for the high probability trend trade are designed to keep you in line with the large crowd. They're designed to put you in a position to just capitalize on all of their hard work. Your small chart is the small crowd, and it bugged me again, guys. These are the men and women with way more power and influence than I have, and they can create those little retracements. But here's the silver lining to that powerless cloud that we sit on. We can identify through rule number 3 right where their failure is most likely to happen when the large chart is giving us our advantages. And when we enter right at their most likely to fail point, that's where the market is most likely to bounce and continue in the direction of everything that the large crowd wants. So the methodology is designed to keep you in line with these guys, but to appreciate the failures from these guys. So that's both platforms, large crowd, little crowd. And now we're going to use the indicators. Nexgen has been teaching people to day trade for almost 30 years now. I want to say it was 98 when doors officially opened. Um, we've had live education rooms for the last 20 years. There are people in this room that have been with us well more than 10, guys, and there's a reason that people are with us that long. Um, you will be able to define using areas where the market is likely to stop, and you'll be able to define using areas where the market is likely to go, and you'll be able to define using areas where the market is most likely to bounce and continue. So areas are a big part of what we do. Now, I like simplicity. I'm very right-brained. Areas are horizontal lines on a chart. That's it. They all have names: divergence highs, divergence lows, resistance, support, yellow one-to-ones, mid-band. But an area on a chart can create a bounce. And that's really all that I need to know about them, is that areas are bouncy. If the market is trending up and it reaches an area, that area is resistance. And if the market is trending down and it reaches an area, that area is support. And that's about as in-depth as you need to be successful with the software. The other indicator that we're going to use is trigger lines. And trigger lines tell the story. Trigger lines give you the best information. So there are small triggers, two solid lines, that work together with the large triggers, two dashed lines. These are moving averages. You don't need to know that. What you need to know is that when they're green, they're up, and when they're red, they're down. We're going to use triggers to define momentum, making sure that rule number 1 is in place. We're going to use triggers to identify termination conditions and when those areas are broken for rule number 2. And we're going to use the large triggers to define the perfect entry on our smaller, faster chart. Triggers and areas. That's it. 3 rules, 2 charts. So now we're going to break down each rule individually. And guys, listen to me when I say this. There's a million ways to use this software. There's a million ways to interpret everything. There's a million ways to break it down into 1,000 pieces that you don't need. I'm going to give you the path of absolute least resistance to be able to trade this plan successfully. Rule number 1 says that the large chart needs strong trigger lines. And guys, let me put a disclaimer in here real quick. Some of you see me and John Novak trading the NASDAQ. This plan is not for the NASDAQ. It's very similar, but this plan is designed for the S&P, for crude oil, for areas that are a little less temperamental and not nearly as fast. If you're a brand new user and you're trying to trade this plan on the NASDAQ, there's subtleties that are needed, adjustments that are needed to find success. If you are hell-bent on trading the NASDAQ, let me know. I will help you, because I have lost against the NASDAQ every way possible and I've learned how to fix it. So, large chart needs strong trigger lines. This is rule number 1. This is going to provide us the advantage of momentum. So when I look at my large chart, you'll notice that there are no areas on my large chart. Don't need them. I don't even need price bars to define rule number 1. The only thing I need is small triggers and large triggers. And now if the background on my large chart is green, the trend is up. And if the trend is up, the only way I can have strong triggers is if both small and large triggers are green as well. And when the trend is down, red, both triggers must be red as well. So this is a little cheat code for you guys. If for some reason the colors on the triggers don't match one another, you don't have strong triggers. And if for some reason the colors on the triggers don't match the background, you don't have strong triggers. You just can't. Strong triggers in an uptrend means that your small triggers, whoops, wrong one. We're going to draw pictures today. That your small triggers have broken away from and above your large triggers. It looks like scissors. And when scissors are open, you can cut. In a downtrend, smalls must be below the large. Space between the two, guys. Separation is strength. When the scissors are open, you can cut. You can get work done. And when your scissors close, when there is no longer space between the small and large triggers, you can't cut. You can take a stab at it, but you're not going to get the same results. So strong triggers, rule number one, either is or it is not. If there is separation and the colors match, you have strong triggers. Rule number one is met. The odds are favorable for the market to continue in the direction of the trend. If there is no separation between your triggers, rule number one is not met. You don't have the advantage of momentum. And honestly, anything can happen up or down. Now, I got a really cool email talking about a concept that John Novak used to teach that had to do with bars in relationship to large triggers and all these different things that are super freaking smart that make total sense to John Novak. Guys, you don't need all that. All you need is the first bar. And to look at it and say, shit, my colors don't match, I don't have momentum. Does everybody see how quickly that happened? My colors don't match, I don't have momentum. Rule number one's not met. If the first bar looks like this, the colors match and there's space between, I have momentum. Rule number one is met. And if my first bar looks like this, the smalls are inside of the large, I don't have momentum, the rule's not met. Guys, let it be very black and white. Let it be very if-then. Separation is strength is your phrase to make sure that you always have this first advantage. Is everybody good with that? Nothing to do with bars, nothing to do with areas. Simply a separation between the small and large. Awesome. Once you have momentum, you got to make sure there's nothing in the way, right? We want room to profit targets. We want to make sure that we can make money because let's be honest, guys, that's the only reason we're here. I mean, yeah, impressing the girls is fun, but I'm here to make money. So a clear path means that there are no bouncy things in my way, no areas in my way. So we're going to define termination conditions first, and then we're going to define what provides the clear path so that we can always have room to profit targets. I want you to remember, and this is so important, or maybe it's not, I think it is. Areas on a large chart, where's my picture? Areas on a large chart are where these yahoos are making decisions. This is where buyers buy and where sellers sell and where fights happen. So what we're going to do to define a termination condition is we're going to let the controlling force get there. You just want the money. Guys, when price bars reach an area of resistance, we're done with price. Price is irrelevant. It doesn't matter anymore. The decision-making process is kicked off by the people in charge. When price reaches support, we're done with price. Has nothing to do with where the market is trading. When price reaches support, guys, when price reaches resistance, we're going to go to the trigger lines to tell the story. So I want you to ask out loud, price reached an area, where are my triggers? Guys, if none of your triggers, if all four of your triggers remain below Fibonacci resistance is a termination condition. If all four of your triggers remain above Fibonacci support, zero triggers through, this is a termination condition. Rule number two is not met. And your rules say, if you're giving yourself the highest chance of success, absolutely no trades into that area. You cannot initiate a trade if you're following the plan, which means that on a pullback, absolutely no trades. And some of you are thinking, but Mark, if the market pulls back, I got room to trouble. No, you don't. It remains trouble until the market either reverses from it or until it breaks. Is everybody good with that? No triggers, no trade. This is going to keep you out of like a slew of losers because the market literally defines using Fibonacci, using these areas, where it may stop. Fibonacci support to the freaking tick, and look at the bounce. Divergence high, and look at the bounce. Fibonacci support, look at the bounce. Guys, you know about these before the market ever gets to them. Resistance, support, resistance. I mean, my goodness. Resistance, resistance, support. Are you guys catching what I'm laying down here? You don't ever have to guess. If no triggers go through, just simply say it. I'm not taking a trade into that area because it could reverse the market, because it could create an untradeable bounce. I don't know what orb is, so I'm going to say no. Panya, Nexgen has been automating Fibonacci for almost 30 years. These are Nexgen T3 indicators. You can sign up for a demo if you want these levels. We have built a career on these levels because they are freaking good. Let's talk about when areas break. But guys, if you're new in here, give me a why. If you're okay with the idea that no triggers, no trade. And then, Panya, let me make your life easier, brother. Welcome to Nexgen, by the way. Let me get you a link to that demo. Just right from the front page. That'll get you right where you need to be. Just click on it. Someone will call you. We'll load the indicators. You come to my class. I'll teach you how to read them. All right. So if the market doesn't reverse, guess what? It's breaking. And areas break all the time. So we're going to count trigger lines. We're not going to worry about where price bars are. Has nothing to do with it. We're not even going to worry about the color of the area that's reached. Has nothing to do with it. All we're going to do is count the trigger lines. So let's start from the absolutely no trade look. Price reaches a line. No triggers break. I choose to sit on my hands and do absolutely nothing because I don't have to guess. My triggers will tell me the story. If two of your trigger lines break through that area, smash through that area, decimate that area with odds favorable momentum, with those strong triggers, that area has the potential to break. But everybody listen closely, lean into your speakers. It's a shit look. It's not the best look. That look is not going to optimize your chances of success. The number 2 is red for a reason. Most of you are going to fight this and wonder why you keep losing those trades. When all 3 trigger lines, 3 out of 4, not all 3, but 3 out of 4 trigger lines get above that line, now we have a red or a yellow 3. Yellow being caution. Yellow saying, yes, this area does have the potential to break, but it's not quite broken. Guys, on the KISS plan that I give you the best of the best, highest probability, optimize your chances of success checklist to make sure that you're giving yourself the best chance of success on this trade. Every time you ignore one of these, you're less likely to win that trade. It's not until 4 triggers break through an area that an area is considered broken, and you don't have a clear path until all 4 triggers get through. Once you have that clear path with all that momentum, now it's time to go define an entry. So what you're going to see is that you can get a clear path established from 4 triggers breaking above areas. You can also get a clear path established from a reversal, because that termination, or even without the termination, the market changed direction and the most current price has not reached an area yet. Because if it hasn't reached an area yet, guys, these are targets. These are not terminations. So the easiest trades that you will ever take with this software, the highest probability trades that you'll ever take with this software, are the ones that have momentum with nothing in the way, room to trouble. These tails that you're going to see on a large chart, and you're going to see them historically after the fact, that's the pullback on the small chart. That's the bounce off an area on the small chart. That's the continuation in the direction of the large chart advantages. We're about to predict right where these tails are most likely to form with such a level of accuracy that you'll wait for the market to get there. So let's go through and look real quick. Dun, dun, dun. No triggers. Blah, that's ugly, right? And then all the momentum. And the triggers, we got at least 3 through there. I'm going to circle this tail. That might have been a good one. We'll go check it after we learn how to do entries. I'm going to circle this tail. Still have sunlight, nothing in the way, previous level is cleared. We're going to go see what those look like on a smaller, faster chart. Weak triggers, even with 4 triggers through, weak triggers, the market could do anything, and it did. It retraced. Only 2 triggers through that area, and look at that. Holds like a champ, and the market continues down. Only 2 triggers through, big untradeable bounce. Weak triggers, big ugly untradeable bounce. Weak triggers at a fib, big ugly untradeable bounce. And where are we right now? We are weak triggers directly into a fib. Do you guys see it? So right now, we don't have rule 1 or 2. And I know it on this 1 bar. That's it. That's all it takes. That 1 bar, the most current bar, says that I don't have momentum. And because price reached Fibonacci resistance and none of my triggers broke, I don't have a clear path. Can you guys give me a why, if that makes sense? Because once you understand that, guys, it is keys to the kingdom. Once you understand momentum and path, you have everything you need to create a really strong, consistent plan. Once you have momentum and path, you should have this picture in your head. I've got 20,000 horsepower and 28 miles before I hit something solid. Guys, that large chart is going to be freaking hard to stop. So now we got to go figure out how to capitalize on those advantages. And we're going to do it with rule number 3. And rule number 3 is such an exact phrase. If you learn this phrase, not only what the words say, but what it means. If you learn this phrase, you'll never miss an entry. If you learn this phrase, you will call your shots and know where your trade comes from long before it happens. You're going to use a limit order, meaning that you'll wait for the market to get to wherever you are. You're going to use a limit order to buy or sell a pullback. That's that small push against the large chart, and it's going to start with a reversal bar on that small chart. You're going to do it at an area because areas are bouncy. Fibonacci support or resistance, yellow 1-to-1s or midband. That's your list. And you're going to make sure that that area is inside of triggers, specifically large triggers, because large triggers show you where the area needs to be. And guys, there's not a lot of wiggle room on this. It's just a pattern. It's going to look the same every time. So when the large chart is up, when the large chart has momentum, when the large chart has a clear path, we are all going to be sweaty palms, clenching them, because it feels as though the market is running away without us. But remember, our plan is trend, fight, resumption. So when the large chart says go look for an entry, we're going to patiently wait for a reversal bar. And this signifies the beginning of the pullback, the beginning of the fight. This divergence is irrelevant. That loss of momentum means nothing because the large chart defines momentum. If there were 1-to-1s here, it would be irrelevant because the large chart defines terminations. All we're doing is using this chart to define the perfect entry. Starts with a reversal bar. Reversal bar is not your entry. The reversal bar is like a little loss of momentum to get you to your entry. Once the reversal bar prints, I can, without question or hesitation, say, that retracement is most likely to go somewhere from the top of those trigger lines to the bottom of those trigger lines. But trigger lines are not my entry. Trigger lines are not bouncy. My rules say that I will buy or sell a pullback at an area, at a fib, at a midband, at a yellow 1-to-1, inside of triggers. So you go through this refinement process. First, you define the retracement zone. Then you define the areas that could create a bounce. And then, with a little bit of courage and practice, you activate a limit order just above the highest point of support, closest to that reversal bar. Why? Because your large chart is bananas to the north side. I don't want to stumble over a couple pennies trying to save a few dollars. And here's the magic of the methodology. Because I know where the market may retrace, I don't get nervous as long as it's inside of those triggers. Because I know it could bounce from either area, I don't get nervous if it pushes through the first one. I've got another one behind it. And when you really learn and trust the methodology, you understand that about 4 to 5 ticks beyond those triggers is where the market should not go. 4 to 5 ticks beyond those triggers. Thank you, Miss Trina. News in 5. Appreciate that. 4 to 5 ticks beyond those triggers is where the advantage of rule number 3 is no longer in play. This is where initial stops will be placed per the KISS plan. And if the small crowd can push through the retracement zone and the areas within it, guys, you don't want to be in this trade. The advantage is gone. I don't know if, when, or where the market's going to continue up. So in the KISS plan, absolutely no trades are taken from the wrong side of the triggers. It's advantage lost. And by defining where the market is most likely to continue, good morning, Miss Cindy, nice to see you. You have defined where the market should not go. You have started the management process. Great entries create very manageable trades, because if you wait for the retracement, you have the least amount of risk. And if you get in at the area inside of triggers, you have the most room to get to trouble. So let's do it the other direction. The best thing about futures is we can eat from both sides of the buffet. Surf and turf, baby. When the large crowd says down, when the momentum is strong, when the path is clear, remember, we are talking about the perfect trade. You're going to wait for the reversal bar. You're going to know exactly where the retracement is most likely, not guaranteed, definitively going to go, where it's most likely to go. And you know that the areas inside of those triggers are where it's most likely to bounce, and you will develop the confidence to activate a limit order and taunt the small crowd with cupcakes and Twinkies and say, come get me. And when they do, you're in the highest probability trend trade ever. And because you've defined where the market is most likely to continue, you have actually defined where the market should not go. And initial stops per the KISS plan will be placed 4 to 5 ticks beyond the trigger lines, right where the market should not go. And guys, this is what I call, well, actually, you know what? I'm taking it from Wayne. This is what Wayne calls a good loss. When you trade a pattern that you can prove, and you will be able to prove it, typically wins 70 to 80% of the time. When you believe in that pattern, when you trust that pattern, when you've spent the time to recognize that pattern, you also realize that anything that wins 70 to 80% of the time is obligated by math to lose 20 to 30% of the time. It doesn't mean that it's a bad trade. It means that it's a good trade that didn't work. Scissors with retracement to support for resistance, or resistance is entry. Pretty much, you skipped the clear path. You skipped identifying problems. You omitted rule number 2. That's your look on a large chart, guys. With momentum, when there's room to trouble, the old trouble's not a factor. So here we go. We're going to sum it up. The market's trading all the way at the top of this bar. And the rational human being says, hey, there's no room to make money before I hit something. There's no room to that line. How am I supposed to do this? Open scissors, and this is why it's hard to learn it in a day, Pena. What you just did is you created your own truth, which is okay. Everybody does it. Strong triggers has nothing to do with path. Strong triggers is nothing more than one look. Open scissors that let me know that I have the advantage of momentum. But momentum is only one of 3, right? So we have to make sure that there's nothing in the way. That is, I've got all the pictures lined up. Where are they? The things that could be in the way, that could stop the market, that could halt forward progress, there we go. Those are called areas. So you have to have room to make money with all that momentum. Does that make sense? And then once you have all that momentum and room, that's where we go to the smaller, faster chart. That's where we define the entry. That's where we reduce risk. That's where we maximize profit potential. And let me show you what I mean in regards to reducing risk and profit potential. When you decide to take the trade, we're all the way up here. And guys, that's like 8 ticks. That's 80 bucks on crude oil. I don't know about you guys. I'm not interested in entering the market for $80. But if you enter at the area inside of triggers, wait for the pullback, that tail is the pullback. You don't know where that tail is gonna go on a large chart, but on a small chart, it's the area inside of triggers, which means if you wait for that great entry, your $80 worth of potential profit suddenly goes into 320. I'll enter the market for 320. Because I wait for the market to come back to that area, my risk is the absolute smallest. And the KISS plan says once you get a reversal bar in the direction of your trade, you can reduce risk behind that reversal bar, making it even smaller, giving you all the room. And guys, it's just a pattern. That's all it is. It's a pattern that repeats itself every day. It's a pattern that is predictable, that is testable, that is findable, that is you can study. We'll do this one right here. Just I want you to see the entry. 2 triggers through, all the momentum. Potential to break, guys. Not even your best look at potential, but the market doesn't know that. All the market knows is that it loves to pull back to an area inside of triggers. That was off the open, 932. I'm not going back 8 days trying to find something to fool you guys into believing me. There's all the momentum and 2 triggers through. Let's see if the pattern repeats here. Right back, there's an area inside of triggers, and I'll be darned, they finished the move down to support. Let's back up. I know we circled somewhere. Well, that's a pretty good look there, isn't it? This was this morning as well. All the momentum. Whew, nothing but room. What did it look like on a smaller, faster chart? Oh, they didn't make it to the area inside of triggers. Guys, there's a magical phrase that I want you to learn when your rules aren't met. And the sooner you believe this, the calmer you'll be. That's not my money. That didn't fit my plan. That didn't meet my demands as a trader that trusts their plan. That's not my money. And whatever happens after my rules aren't met, I don't care. It's not mine because there's too much opportunity in the market. Pull back to an area inside of triggers. Perfect. 2 ticks below those triggers inside of a area inside of triggers. Beautiful. Do you guys see the pattern? The pattern repeats itself every day. Pretty much every market. You can go look at client trades presented in the room. That file is no longer available. That's my weekend homework, as I'm going to clear dead files. Hey, Paul W., you remember this one? Momentum, path, pull back to an area inside of triggers. Paul, you were taking high probability trend trades in 2022. I don't know if that was actually you. Might have been a different Paul. All the way back in 2022, it's the exact same pattern, guys. Learn your patterns, trust your patterns, keep it simple. Your KISS plan is insanely helpful. Your KISS plan tells you exactly how to use the 2 charts. One is for direction, momentum, and areas. One is an entry chart. Your KISS plan is not for that one. Reminds you where the advantages are found. Your KISS plan gives you the checklist. It does talk about what we call a strong top or bottom, which is a no triggers through termination that reverses the market. You don't even need it for the KISS plan. It's not mandatory, but it helps. Strong triggers. Rule number 1, either is or is not. Let's see what the termination condition one looks like. No termination conditions. Oh, if price reaches an area and no triggers break, no trades into the area. Pretty cool, right? Hold on, what's next? Got to define an entry. Pull back to an area inside of triggers. So one of the things that I do for you guys that are relatively new is I 100% embrace the idea that when you couple language with what the eyes see, you're less apt to make mistakes. So here's your language for NinjaTrader, guys. The first one for rule number 3, strong triggers, is separation is strength. And if you're overthinking it beyond that, you're thinking too much. The second one, to make sure that there's no terminations, no triggers, no trade. That's your very basic core to let you know that the rules for the high probability trend trade aren't met. Now there's opportunity beyond it, but if you can't get this one, you're going to struggle. And then finally, rule number 3 is use a limit order to buy or sell a pullback inside of triggers. And I'm telling you, if you do that, you will call your shot before the market ever gets there. And let's go find one of those ones that we circled. And I want you to see something. There's the actual entry. There it is before the reversal bar. If I just use the phrase, my entry comes from an area inside of triggers. Guys, give me a Y in the room if you see. That's it. That's the only option for a trade. Long before the reversal bar. That's it. That's the only one that fits the description. And as the market reverses, my midband comes up a little bit, right? And as the market pulls back, that midband rolls up a little bit. But that's it. That's the only option. And then I'll be damned, it hits the midband twice and runs. So before the trade even reverses on the small chart, I know exactly, thanks to language, exactly where my trade comes, precisely, to the point to where I will right-click on a chart and wait with a limit order. And guys, that's your high probability trend trade. Keep it simple. You guys ready for TradingView? We already had one person in the room announce that they passed their evaluation and funding using this one concept. One trend trade. Only 3 rules. And to be honest, it's really only 2 rules. It's just I divided them out because it's 2 separate charts saying the same thing. 3 rules, 2 charts. So again, Panya, if you have TradingView, when you start your demo, you can get these indicators as well. There's a 15-minute chart as your big chart. It's your large crowd. It's the overall opinion of the market. It's going to define the direction, the momentum, the key targets, and the areas that you shouldn't trade into. The 1 minute is going to define the immediate strength of the market. And guys, it's pretty easy. It's going to use trigger lines. Don't fight them. And then it's going to define your entry point. So when everything is up, you're going to wait for it to come down. And you're going to be able to pinpoint your entry. This is the small crowd giving the fight. We're going to use trigger lines, small and large. And if I'm being 100% honest, guys, I don't think you need large triggers to be successful with this plan. Not the first trade, not the trend trade. So they don't even exist on a large chart. They're added into a small chart because the second trade on the TradingView plan is what we call a momentum trade. And if you don't have separation between the small and large, you don't have momentum to take that trade. So this is only for the second trade after you learn the trend trade. Both charts have areas. Areas are bouncy. Areas can stop a market. And guys, it doesn't matter if it's the big chart or the little chart. Areas can halt forward progress. The biggest mistake new users make is trading into areas using nonsensical words like it should break, it will break, it has to break, I hope it breaks. Guys, if you hit an area, that area can create a bounce. So now let's just break down this one trade, keeping it simple, keeping it focused, not overthinking things, understanding fully that there's a million ways to use this software, but there's a very easy way to find success with it as a brand new user, and it starts with the trend trade. Define the trend. Make sure that your big chart isn't trading directly into areas. Clear path. Make sure that your small chart isn't trading directly into areas. clear path. The rule's so nice, we said it twice. And then just buy or sell a pullback at an area. And there's a little trick I'm going to show you to not fight the immediate strength. So large chart defines trend. Robert Mark, you remember when I told you that I pull all the noise out of the equation for brand new users? Your large chart doesn't have large triggers on TradingView. Your large chart doesn't have background colors on TradingView. You don't need them. You can define a trend simply by looking at those small triggers. They're either up or they're down. And if they appear to be going left to right, you don't have a trend defined. Paul, have a great weekend, man. Darn responsibility's been ruining things since the beginning of time. Have a great weekend, brother. So guys, trend is defined by the small triggers. Let it be decidedly up or down. And if it's not, be cool with toast and a bagel and walking the dog and doing something else. Once you define the direction, the first rule says, make sure you've got room to money. So wherever you take your trade from, and this is an important concept of TradingView, is that you need to know all of these to piece them together. They're in this order, but you've got to define your entry to know that you have room before you hit something. So when I look at my large chart, I'm looking at just wherever the market is, and I'm saying, do I have room if I entered right now to get to trouble before I hit something that could create a bounce? And if the answer is yes, and only if the answer is yes, I'll go to my small chart. And my small chart says from wherever I enter, from wherever my pullback is, I have to have room from my entry before I hit something that could create a bounce. And guys, this is a very important concept and a huge producer of losses for new users that trade directly into areas believing that the large chart gives them the green light. So you have to decide how much is enough. I put $200 as a baseline for new users because what we're doing is we're saying if the market can bounce off of something, I'm going to have to react. And the bigger gap I give myself, the easier it becomes to react. So from entry, is there room to trouble? And if the answer is yes, I'm going to show you how you define your entry. In an uptrend, when the small triggers are up on the large chart, when the path is clear on the large chart, oh my gosh, so you would have to do it differently. Robert, are you on NinjaTrader or are you on TradingView? You're on NinjaTrader, right? So it would be 20 bucks at $5 a point, which is 4 points, and 5 ticks. I believe that's 20 ticks. I believe that's 20 ticks on the NASDAQ. Somebody feel free to correct me if I'm wrong. But I believe that's what it is, because I'm in the middle of something and I don't multitask well. Oh no, OG, sorry about that. Thank you for the update. Guys, when the large chart says up and there's room, we're going to define the fight and where we hope there's continuation. That's it. It's the exact same look, right? Boop, boop, boop. So your small chart will also be going up. And it's this right there. We don't wait for a reversal bar. Not for the pullback, because let's be honest, you might get a million reversal bars on the way up. It's the small triggers rolling down when the large chart says up. That begins the fight. Once the fight starts, you could literally draw a box at any area lower. Whether it's a mid-band, whether it's one-to-ones, whether it's one of those zones if you have chart prime, we need a pullback to an area. And then here's the trick for entry, guys. You're going to turn your attention lower. You're going to let the market get there. But entry is defined by an up bar. that finishes, and when I say finishes, it closes. The timer is done on that bar with both corners of that close above the small triggers, on the good side of those small triggers, on the weak side of those small triggers, on the trade side of those small triggers. And this is how you don't fight the immediate momentum. Because as long as price is left of those triggers, guys, it's probably pushing down. So you're going to buy or sell a pullback in an area with a close above the triggers. That's your entry for the long trade. The same is true going the other direction. We just flip it on its head. When the large chart says down and there's room, we're going to turn our attention to the smaller, faster chart. And we're going to say, because the small triggers have turned up against the large chart, I'm going to start circling areas that are higher because my rules say pull back to an area. And guys, if you don't have a pullback to an area, you don't have a trend trade. And if your small triggers didn't roll against you, you don't have a trend trade. Once I get there, it's not this reversal bar. It's that reversal bar that closes below the small triggers, guys. This is where the small chart turns tail, gets in line with those large charts, and that's where it's most likely to continue down. Most likely, not guaranteed. So when my small triggers are up on the large chart, is everybody good with this concept? When the triggers are up, there we go. When the triggers are up, so is the trend. I'm going to tell you guys right now, my job when this class is over is I watch all of you trade. I watch you in the funding company, and I look at your positions. And let me see if I can find a picture of it, because sometimes I'm so floored that I send a picture to my brother. I will see in the funding company with these triggers up, 10 to 20 positions going short, and every one of them in the red. And I'm not saying that Nexgen's way is the best way, but what I'm saying is that from what I see in the funding company daily, if you can learn how to not fight these triggers, you're creating a huge advantage. Once it's there, nothing in the way, clear skies, right? Let's have room to make money. And then we just go to the small chart, and it's trading all the way up here, and your fear of missing out is full tilt boogie, guys, and you're like, I'm never going to make money. And then the small triggers roll against you. And you say to yourself, the fight is on. Where could it go? It could go to these 1-to-1s. It could go to that mid band. It could go to something way down here. Hell, I don't know. But I'm not entering until it gets to an area. I won't even consider it. If they head fake me, no. Price didn't reach an area. And then I get an up bar that finishes above those small triggers. And guys, this is where the small chart is most likely to bounce and continue in the direction of the trade. And just like on Ninja Trader, how you have defined where the market shouldn't go, you can use this pivot for a stop. Remember the pattern? Trend, fight, resume. So what are we saying in a trend trade? And guys, I like making these little stories. The buyers are in control. That's what an uptrend means, right? And then the sellers fight. And let's do this. And fail. And the buyers come back in control. We're going to use their failure point just below it as our stop to say they tried, they failed, that's it. If they go any lower, I don't want it. So you're defining stop placements by waiting for the best entries. If you didn't let the market get to an area and you take this trade and put your stop behind the failure point, not where the rules are met, you got stopped out and lost, and now you're mad and probably didn't take the next trade. In a downtrend, triggers are down, room to trouble. Because the small triggers roll up, I wait for a pullback. Guys, I don't know which one of these areas it's going to be. I have no idea. I don't have a magic 8-ball. Oh, wait, I do, but it's online. When it gets there, don't do it, don't do it, don't do it, don't do it. Bingo, bango. Down bar below those small triggers, and egads and little fishes, down it goes. So better to look at target and wait for re-entry on pullbacks if you're following rules. So the challenge, Panya, and I know you've got a completely incomplete look at what we do so far. Welcome to the room. Again, it's nice to have you. What a lot of people do is they say, my target's all the way up here. And they jump in. Here, let's get rid of all this nonsense off the screen. And they jump in right here, hoping it goes to their target. Have you ever done that? If you've ever been a day trader, you've done it. Man, they're cranking. I sure as hell hope they go. Well, the market does this all day long. All day long, right? So you take a methodology that says, I know there's typically a fight. I'm cool waiting for the fight. I can pinpoint when where the fight's like to be lost, and then I'll just get back in and hopefully they hit my target. It's the patience that you put into the market. It's the sitting still. It's the doing nothing. That's what typically produces great traders. I found this morning. This spoke to me. Oh, get back up here. The market isn't against you. Doesn't even know you exist. It's your impatience that turns opportunity into self-destruction. Does anyone else identify with that as much as I do? So, Panya, what happens is you can't hold your water anymore and you jump in. And then it does everything it typically does. And you're so pissed off about the loser that you never take the winners. So what we teach is a methodology that you can study, that you can prove, that you can test, that helps you develop that patience. And that's all it is. And the plan that I give gives you a clear-cut, 100% way to trade those indicators. Look at that. Price reaches Fibonacci support. Absolutely no triggers. Full reversal. Market's cranking up, right? Where are we right now? Where's the most current bar? Let's see. Odds favorable momentum. 3 triggers through. Pulled right back to the area inside of triggers. And now it's considering bouncing. But I'm losing momentum. And that blue line right there, my friends, if you're in my room and you're listening, that blue line right there kills more potential to break trades than it does not. That little divergence right there is the creator of sadness for everybody that hopes. That's it. And Nathan, I actually had somebody send me a message, and they use the language. So check this out, and you may appreciate this. I hope everyone does, because we've all done it. If you've learned the methodology, guys, that's a great looking entry, isn't it? Just if I get rid of that, that's a great looking entry. That's a pullback to an area inside of triggers. So this is what people do. And Panya, this goes back to the patience. I know that divergence is more likely to ruin my day than make it. But that entry sure looks nice. Or I like that entry, right? And what you do is you say, I know this breaks the rules. I know this kills this trade. I know this just has always led to heartache and woe. But boy, that sure is pretty. I'm going to take it anyway. And then you lose. And you're like, fudge. And you post it in the room. And you're like, Mark, look at the entry. It was perfect. And I say, but Joe Bob, how many times are you going to trade with divergence on this trade and lose it before you get sick of losing it? He's like, yeah, but how do I take it with a divergence so that it doesn't lose? I love that question. How do I break my rules? How do I break my rules so I can take advantage of a trade that isn't happening? You don't. You follow your plan. Because more often than not, your plan produces winners. That loser gave you odds favorable momentum and a clear path. After you took this loser, It pulled right back to an area inside of favorable large triggers. But you were so pissed off about taking the losers, you missed the $500 winner. Guys, this is day trading. It's not what you do, it's what you don't do. That's what creates accounts that are big. That's what creates accounts that pay out. Is your ability to do nothing when your edge is not available, when it's not there, when the plan's not met. And you can ask me 1,000 times, Mark, how do I break my rules to take advantage of this look? You can't. There is no way. But when you have momentum, 3 triggers through, there's divergence again. Let's see if it pushes lower. Holy crap, right through it. Your plan keeps you out of that trade, my friends. Can you learn it in its most basic form? Can you learn it without nuance, without exception, without your thoughts beyond what is or is not rules met? Can you ignore the noise? If you can, you'll be amazed at the success that you find. I posted this, or I talked to you guys about this yesterday, and then I'm going to take a break. The 5-day challenge. If you're not where you want to be with your trading, I challenge you to follow the KISS plan verbatim to the letter without any deviation, and tell me where you stand after 5 days of consistent trading. Does that make sense? 5 days. Nathan, yesterday in the room, you said that you could reach your goals with nothing but the KISS plan. Trina told me this morning that she funded an account with nothing but the KISS plan. So when does the KISS plan not work? The exact same time that a diet stops working. When you stop following it. When you start saying, well, this one cupcake's not going to make a difference. Can't undo all my hard work. Sitting still and waiting is a tough part. It is, man. Your hand is just floating on the buy and sell, right, Panya? Dude, congratulations. You're human. And Nathan, I want your results, right? I want you guys to tell me how you did, because I've never, ever in the history of the KISS plan had anyone show me less than 70%. And I was telling someone this morning that the one guy that told me that I was full of shit and this didn't work actually learned the rules and followed it to the letter and was like around 93%. So there is a path. Can you stay the path? That's the question. It's the hardest thing you'll ever do. I know it. I know. Oh, did I not finish it yesterday, Nathan? That's the ending of the story. Is he called me on day 7 after 5 days of trading and having the weekend to mull it over. 93% winners, Nathan. And do you know how we got there? Can I tell you how we got there? Y'all get your ears on. And he had never posted in my room. This is an important part of the story. He had never posted in my room. So what he believed, and Panya, this is a good idea of what you were saying earlier. What he believed is that if all the triggers were red, he had the advantage of rule number 1. Guys, is that true? If the triggers are red, is it momentum? No. It's an easy mistake to fix, right? But if you don't post in my room, I don't know you're making that mistake. And what you do is you say, I've always had strong triggers and this doesn't work. F Mark Novak. And then he would say, I always had a clear path. Because Mark, hold on. Because Mark, look, price got above resistance. Guys, is that a clear path? No, the answer is no. Not until all 4 triggers get above. So once again, super easy fix, right? But if you don't show me what you're doing and how you're reading your indicators, how can I ever help you fix it? And then one more time, because guys, he was awesome at creating his own truths. He says, I keep taking entries inside of triggers. What's missing in that phrase? I keep taking entries inside of triggers. Well, guys, that could be anywhere. Inside of triggers, isn't the rule, right? Or I keep selling a pullback, or it's a complete phrase. Or pullback to an area is what he was saying. Forgive me. So what he was doing is he was jumping in on the wrong side of triggers and getting steamrolled over and over. So what we did, and guys, it's the same thing that I cordially invite you guys to do every day. I said, do me a favor, Bob. Every trade you take, I want you to draw an arrow, and I want you to tell me if you had rule number 1 met. And I want you to use the words small before the below the large, colors match, rule number 1 met. And my promise to you is that we'll fix any misconceptions that you have about momentum. And then from wherever you're taking your trade, I want you to count those trigger lines, and I want you to tell me, was your path clear? Was it only potential, right? Was it a termination? Let me know how you're reading the indicators, and any misconceptions that you have, my promise to you is that we will clear them up and provide a fix. Same with entry. And guys, if you go through this, there's nothing you can F up that I can't un-F. There is no mistake you can make that I haven't made. There's no look on a chart that I haven't seen 1,000 times. I have to see what you're doing so that we can create a fix. And then here's the hard part. You've got to accept the fix. You've got to accept the critique. So it goes back to the picture that I posted earlier today. Guys, when you post in my room, I don't care how big it is. I don't care how many times you've used it. What I care about is, are you being truthful? Are you actually showing me everything? Or are you just trying to make me believe you're a better trader than you are and you're totally cool wallowing in your own misery? Well, Panya, let's fix this. Instead of follow the KISS, let's start with the easy one. Learn the KISS. Learn the KISS plan. Learn what it means. And when you learn what it means, guys, following it is so much harder than learning it. Because the market moves a lot. And every tick makes you think you're missing out. And every push up makes you feel like you're not making money that should be yours. And everything freaks you out. 3 triggers through. Whoop, that's not from a strong bottom. That doesn't fit my plan. This most certainly does, though. Odds favorable, clear path, areas inside of triggers. What's the only thing missing? Pull back to an area inside of triggers. And it's got to happen before it hits that red line. Oh, damn it. I don't have momentum anymore. That's how quickly you will read your indicators. And guys, what's the magical phrase? It's not my money if I'm following the KISS plan. You guys want to know what the good news is? When you understand momentum and path, that is a textbook Nexgen taught momentum trade that was good from 85. Well, they're still going all the way up to 95. 10 points, $500. Pretty cool, right? We teach this trade, but if you don't understand momentum, you can't take it. If you don't understand the potential to break, you can't take it. If you don't understand that you need to wait for a snap back to an area, you can't take it. You don't understand the concept. So start basic and know that you're going to grow. All right. I'm feeling preachy, so I'm going to walk away. When I come back, I'm going. Supreme just ruled 6-3 against tariffs. Okay. Let them do what they do. Guys, when I come back, we're going to start clicking on your pictures, answering your questions. Post them if you got them. But before you do, go stretch your legs. Nobody should sit in front of a computer for that long. See you in 5. get back into it. I'm scrolling up to the very top of the room so that we can see everything that you guys posted. Before we do any of that, aw, congratulations on your adoption. Maisie is beautiful. All right, guys, so I'm almost up to the top. If I miss one of your pictures, guys, I apologize. It's not intentional. Just tell me. Repost it. Say, hey, Mark, you missed this one. And remember, and this is such a big part that I want you guys to remember, I'm not the trade police. I have no desire to be the trade police. I don't want to tell you what you did is right for you or not right for you. What I do want to do is give you everything in my arsenal to help you become a better chart reader. So hopefully you can make good choices in your own trading. And most of it comes from that foundation. You'll find that everything that I go back to tends to revolve around momentum, path, and entry. And because everybody's at a different level in this room, because everybody's at a different place, because everybody's at a different stage of their learning, you're going to see people in this room doing things that don't fit your idea of the perfect trade, and that's okay. They're just in a different spot. They've learned more than you is the easiest way to say it. They've done the study, they've learned their patterns, they've built their plan, and their plan is outside of the KISS plan because of the study, because of the feedback, because of the things that they've done. So I'm really flapping my gums right now, filling space as I go through and click on all these links. I love it when you guys post this many in the room. Almost there. Miss Cindy's husband's trades. Maybe Miss Cindy's trades. Miss Trina. Rocking it. Look at you guys flooding the room. That's what I'm talking about. And then Nathan, we will start with you next. Hey, look, momentum. That's cool. Terminations. Entries. Maisie. All right, guys, here we go. Termination condition is reached. The market reverses. It has momentum. And Pete says, let it get below all this trouble. Let me read my indicators. Let's make sure everything agrees, momentum and path. He goes, and then I'll just find a way to jump in and make some money. Momentum and path, guys. Not a trend trade at all. Doesn't even resemble a trend trade. But with momentum and room to things that are bouncy, Pete finds a way to make a couple $100. And you're going to see this a lot in the room, guys, where people say, you know what, when I have momentum and path, life is pretty good. And now, Pete, do you have your ears on? Strong top, triggers rolled, odds favorable. 3 triggers through that fib. Directly into a termination condition. Directly into a termination condition without momentum. Directly into a termination condition without momentum or momentum here. Directly into a termination condition without momentum or momentum here, and a $210 stop with absolutely no areas inside of triggers. Guys, this is a trade that will fail more than it wins. Pete decided to take it. That's Pete's right. But your annotation doesn't. Your large chart said, hell no. There's no reason to jump the fudge in. So guys, let your annotations go back to what's actually happening. And this is just a little cautionary tale for those of you. Very often we will write what we wish it was rather than what it is. So Pete, I'm glad you got lucky. The market gods smiled on you for that one, but I can't find one rule anywhere, not even for a jump the fudge in trade. So good job. You said 3 triggers through, Pete, which suggests the potential to break. You were directly into a divergence low with absolutely no triggers through. You chose to recognize the previous area, not the one that was hit. Not a 50-50 here. No, it's not semantics at all. It's 100% rules. 2 triggers through the fib doesn't do anything to negate the termination condition here. So you can say 2 triggers through all you want, but the reality is it's already gotten to the place that could stop the market. Not at all semantics. Very black and white rules. Respectfully, of course. But you entered the trade and you took it up to the area that could stop the market. So price hadn't reached the area yet. So 50-50 qualifies. But if you took a trade directly into 6,900, it wouldn't qualify. Beautiful, beautiful target on that one. Guys, this is momentum and path. This is perfect. Pete, you're famous for this one. But every now and then, you fudge the rules. I'm gonna point it out. I'm gonna point it out. It's my job. It's what they pay me to do. Momentum, 3 triggers through, jump in, get out. There you go. Jumped in because of the large chart potential. Good job. Same look, 100% momentum potential to break. Jump in with the momentum. Get paid. Nice job. All right, weak top. I love it when we do this. Jen, did we talk about this trade or did we not show this one? I may have missed it in the lineup where you had 2 triggers through and took it and lost. Maybe if I missed it, I apologize. And then down here, we do have 3 triggers through. We have a pullback to the area outside of the triggers. And you managed to get paid. I love it. 3 triggers, divergence, weak tops. So guys, once again, your trading is your trading. Your trading is your plan. It's your thing. It's yours. My chart read goes back to the KISS plan every time. And Jen, respectfully, lovingly, between a weak top, weak triggers, and divergence, and no areas inside of triggers, you got lucky. You broke damn near every rule on the KISS plan. Now let's talk about the good. Jen said, all my triggers are screaming down. There's an area of resistance. I'm going to give it a shot. I'll take it and manage. And you did a great job of it. Did a great job of it. But if you guys tell me you're trading the KISS plan, I'm going to point out to the KISS plan. Strong top, odds favorable, 3 triggers, no divergence. Pull back to the area inside of triggers. It just missed you, so you catch it on the way down. Very nice. And then the momentum trade before it. You and Pete taking the same one. And I love it. Get paid on the momentum trade. Let it turn into the trend trade. And then take the trend trade. Nicely done, Miss Jen. Price pulls back to the mid-band, closes below, and no area. No room before she hit an area. And I love this because in the moment she was pissed. It went anyway. And if you guys were watching the market, it came right back up. Right back up. It's okay. It's either going to work or it's not, guys. We don't get to control that. I can read between the lines. It's why I'm sitting in this chair. All the momentum, and then 8 ticks, not a clear path, brother. Under no circumstances could we ever call this a clear path. Not if we're using anything related to Nexgen. This area has the potential to break. And because of that potential, because of that momentum, you take the breakout trade, the momentum trade. You take it perfectly, and you're able to capitalize. So does it mean that it's wrong? No, it just means that, hey, with 2 triggers through, it's not a clear path. Why do we talk about that? Let me give you guys some insight into my brain. Clear path makes my brain say, not a thing to worry about. That's it. That's what a clear path means to me. The potential to break means I better manage. That's it. That's the only reason why I'm so adamant that we learn the difference between a termination and the potential and a clear path. Because you've got to manage according to what you're working with. And if this is a mistake, right? If you believe that that's clear, Well, you might not take profits and you might let it come back here and you're like, well, it's the perfect trend trade and give it all back. So I want you guys to have your management hats on when it's appropriate. And then everything is down, it pulls back. And then that support, yep. And then Jen, it just didn't set up for you. Just didn't set up for you. And man, that's a bummer when it runs, right? Just not my money. And I thought you were on the NASDAQ and I was like, oh, finally it gave her the trade after the one didn't work. And you were on the S&P. So um, staying on the NASDAQ would have helped on that one for sure. And then you go back to the NASDAQ and there's the perfect pullback and the beautiful entry. And looks like they just, man, by a tick, right, Jen? So I know we hate risk, guys. Everybody hates risk. Your stop was so tight. Like one tick on a minute bar. I'm typically 4 or 5 ticks above that pivot because there's fluctuations. That was super, super tight because at 80, where were you? At 79, you're $180 a contract, and that 360 starts to create a little bit of a pucker factor, right? And they got you. That's okay. It happens. You're a bit scared of the 2-lot losses. So Jen, how do we get over that? What's the difference between a 1-lot loss and a 2-lot loss? Is it the same rules? No, it's okay. Do you trade the same rules? Yes. Do your rules give you an edge, an advantage? Have you proven that your rules win more than they lose? Yes? Okay, let's do an experiment. The triggers are up, right? And from where we are right now, we could say, man, maybe there's a little bit of room there. Hold on. I don't think my simulator will let me redo that. So 25. Jen, does the market know that I'm in on a 26 lot? Does it change where my stop goes? Does it change where my profit targets have to be? It really doesn't. These numbers are mental. They're 100% mental, which is 100% normal. Because most rational human beings can't fathom the thought of $26,000 in risk. But watch this, $26,000 in risk is the exact same risk as the 475 of a 1-lot. It's the same trade. It's the same reasons. It's 100% mental. So if you're uncomfortable with a 2-lot, trade a 1-lot. Yes, you have, Ron. And until you're so comfortable with it, Jen, I had an aneurysm when I started going to 4 lots because I would look at my risk and I'm like $700 or $800 risk. And I'm like, but the reality is the risk is exactly the same. It's just a percentage of the move. And Simulator helps work through that. Simulator helps work through that a lot. Trade 2 lots on Simulator, right? Let it go. Or one of the other things, Jen, and this is what the KISS plan does for us. I want you to see something. So you're in at 70, right? So Jen, here's a thought, just for grins. Just for grins. And this is the idea behind the KISS plan that I give. If I'm in at 70.25, is there any reason I can't take $100 off that trade, go to break even and just see what happens, right? And see how often I get stopped out on the second one. But don't risk anything, right? Because Jen, you knew that the potential was for it to go all the way down here. And that's not the best stop. But it at least gives you the courage to see what happens. That's one of the reasons why on the KISS plan, if you guys look in the NinjaTrader KISS plan, it says take 100 and go break even and build the trust, right? Build without any risk on the trade. It's so much easier to let it run. So much easier to let it run. And then Jen, what happens? What happens next is you're like, okay, I took my $100. I'll risk 50, right? It's the right trade. I know it's the right pattern. I'll risk 50 and I'm willing to give that back if something goes wrong. And then you're like, you know what? I took 100. I'll risk 100. Because worst case scenario, I come out of this trade break even, but the more room I give the perfect trade, the better chance I have of letting it go. And you can do that incrementally, right? Go from +1 to back to back to back and build up calluses. Build up calluses to market movement. So great post. And Wayne says that, 2 off at 120 a contract every time. You're welcome. Because your entries are phenomenal. And guys, great entries create manageable trades. When your entries are stellar, you're giving yourself such an edge. But then we just have to trust. And this is another one. So Pete, I don't want you to feel alone. Weak bottom, all the terminations, wrong side of the small triggers, and Jen makes a little money on the way up. Doesn't fit anything I've ever taught. Doesn't even fit anything that I've ever seen her do, right? And then Wayne, you says it lets you keep the logical stop at break even or worse. I love that. And this is one of those things where you're just like, hey, I think I see something. I really want to be in. And you were annoyed at the TV trade. And then, guys, this is, I don't know how my wife is married to me. Going back to typing what we wanted it to be, not what it actually was. So Jen, I apologize, but this divergence didn't print until up here, which means that you didn't enter with the second higher, right? I'm so guilty of it, which is probably why I see it. And that's why there's got to be truth in annotation, guys. Not for me. I see it. I know the shenanigans. It's for you, so that when you go back and study it, you're like, whoa, I jumped the gun. I was a little bit too early, and that builds patience. Oh, my path wasn't clear. I should have managed this differently, and that sets you up the next time it isn't. Weak top, triggers rolled, odds favorable, 3 triggers through. Jump in based on the large chart, like a parrot. Half off 10 ticks, balance at profit trailing stop, like a parrot. I love it. It says the same thing because it is the same thing. And then 3 triggers through, multiple divergences. And then jumping in without any advantage. And thank goodness you made a couple bucks. Thank goodness you made a couple bucks. This is as sexy as it could be. That's trying to get wine from a turnip. Now it's a clear path, right? There's that beautiful trade, that consistent trade, that, man, this one just seems to produce results trade. And then it doesn't quite get it, dagnabbit. And then you jump back in, you're like, here we go, good side of the triggers. And they're like, Pete, we're going to come get you a trend trade. And Pete's like, I know this move. Let me go ahead and sell the high tick right at an area inside of triggers. That's awesome. Making money. That entry right there is what makes my job worth it. When you guys sell the high freaking tick. That's amazing, Pete. Good job. All right. Is this Miss Trina? This is Wayne. The trend is down. He's got room to trouble. He's even on the strong side of the triggers. There was your trend trade entry up there, right, Wayne? And this is one of the things. Like, that's the entry. And Wayne maybe said, I don't know. I don't dig that zone there. I can't tell how much room you had. Looks like you had a couple hundred to get there. 49. You had at least 200 to get there, but that's okay. And Wayne says, I'll just let it break below and then I'll jump the fudge in and hope that it continues doing what a trend trade does. And there's nothing wrong with that. Guys, we see a lot of this in the room. We had a lesson the other day, and I just want to point this out. If you're taking this as the trend trade, your stop is way up here, right? So if you jump the fudge in without any rules met, just hoping it goes, develop a management plan for it. Do something. Do something. You know, like have a plan. And Wayne, I know that you do, right? Stop was tight because it just jumped in. Sometimes if I'm like, oh, it's perfect, I'll be like, okay, if they can get back above this resistance, they can have my money, right? So it's not all the way up here. It's like, okay, that's a smaller one. If it turns into a momentum trade and the momentum trade fails, they can have me. Yeah, so you have a reason. I know that you do, Wayne, but a lot of people don't. This is the, oh no, it's going without me, I'm just going to jump in. And guys, when you jump outside of your plan, you're more likely to use erratic stops, to use crazy targets, because you know it's not in your plan. Wayne, this is a part of your plan. You know exactly where your stops go. But that was more for the other room. And guys, sometimes there's great lessons for you guys from other people's charts, even if Wayne doesn't need that lesson. Broke the zone, pulled back to the zone. You catch it on the way down. All right, I'm going to tell you guys how much I love this. Do you guys remember on the trend trade where it says, wait for a close below the small triggers that have turned against you? That there's a pullback, right? And we're not fighting the immediate strength of the momentum. This is such an important concept to latch on to what Wayne did here so well. Trend trade entries say, don't fight the immediate strength, wait for the close below. Don't fight the immediate strength, wait for the close above. TradingView people, let me know if that makes sense, please. Because you're about to see how smart Wayne can be on a Friday. If those triggers are down, can Wayne fight them? Is Wayne fighting the immediate strength? No. He had the pullback. Everything says down. It's at resistance. It's not a true trend trade, but it's a great recognition. It's still waiting for the pullback. He just, yeah, well, yeah, and it is momentum. But that's a good lesson. That's a good lesson. And with all that momentum, he just jumps back in on the way down instead of catching it on the way up, which I like because it had already reached trouble. Wayne's like, yeah, the triggers say it could hold, but I'm going to force those mofos to go down. And I love it. It's genius. It's taken the basic, the very core concepts and repetition, creating a bigger consistent plan. Great job, Wayne. And it shows in the results. And I saw you trading those 9 lots. Nicely done, dude. Nicely done. And for those of you that don't know, when Wayne started reading indicators with Nexgen, when he first came to us, Wayne probably posted in the room 50 times a day and got feedback on everything that he did and every question that he had. And now he's just at a point where he's teaching me some stuff that he's seeing. So great job, Wayne. Love it. All right. Victor, you're going to show some growth in management. You have reached your goal on semi-live in 3 days, average 800 per day. Now I'm going to go on paper. Have 5 more days that this average will hit 5,600, which locks drawdown and allows full payout. No need to push and lose some of the gains. I agree 100%. I like that, Wayne. Free resets, dude. Trade 17. The other day, I was bored, and Apex had 90% off, and I passed a 50,000 and 150,000 in about 2 hours. Yeah, that's about it. It was 2 trades on the 150, and it was about 2 hours on the 50 because the drawdown was tighter. Guys, it's not hard to do. especially when you take the right trades. 2 trades on the screen. So Victor, I agree. Victor said he hit his goals and he shut down. That's huge. Trina, if you want to stay after class and talk about it, we certainly will. But there it is right below you. I'm not going to go into all the drawdowns. It is 100%. So Trina, Wayne won't know what these are, but these are called instructions. So he probably couldn't point them out to you. But the drawdown and everything, we have gone to crazy lengths. Crazy lengths to make sure that you get a full explanation, trailing drawdowns, when they lock, when they stop, all that good stuff. Go through it, and then if you have questions, let me know. Otherwise, I'm just going to read it to you. We'll get some more milk and a nighttime story, because it will put you to sleep. But it's important to know. It is important to know. All right, so let's see. The first trade. Pull back to an area. 1, hold on. Trend is down. So you're taking counter trend trades now. Okay. The trend is down. You go long, HVA from the termination, and get off at trouble. I like it. Counter trend trade, get paid. And then everything is still down, and it looks like you had room back to trouble, so you take the trend trade back to trouble. I love it. Going both ways. Triggers are up, strong side, room to trouble, pulls right back to the mid-band, closes above, really tight. So you take profits at trouble and then hold the second one for bigger. Great job, Victor. Nice trade. Nice trade. Realizing where trouble is and being willing to get paid there. Quick short after news, weak top. Weak triggers, I don't know, maybe 2 triggers through, no momentum. Pete, I feel like I'm whipping your ass today, and I don't mean to. Yay, you made 300. You made 300. I guess I can't argue with results, right? Can't argue with results. Man, you, respectfully, you're about 3 steps left of how you have been trading for the last 2 months. That's all I'm going to say. What you're showing me today does not resemble what you've shown me for the last couple months that has been bringing you success. It's just a pattern recognition. Do with it whatever you want to do. Weak triggers, no rules for short. And then Ron says 3 divergences in the same price range. This is a small chart termination. So Ron says, okay, 3 divergences. I've seen this pattern. I know this pattern. Even though it fights the large chart, very often they at least create a reversal bar up. And he does. He capitalizes on it directly into trouble. And Ron, I asked in the room, and I didn't know what the answer was. Does being on the left side of these triggers influence your entry? This is me just wanting to learn. Being on the strong side of those small triggers, having that momentum, is that an influence, or is it the divergences in the pattern? And this is just me curious. And you don't even have to answer. You can send me a message if you want. But letting the small chart change if you're going to fight the large chart. Letting the small chart flood you with advantages if you're going to fight the large chart. It's just a great chart read. Master B, you can. I'll do my best to answer it. Right on, Ron. Triggers up from a strong bottom. We saw this one. We talked about it. Just riding momentum, man, like a wave. Riding momentum like a wave. Trend trade, triggers down, transition, room to targets, pull back to the midband, close below, out at trouble. Rinse and repeat, right, Victor? Rinse and repeat. It has nothing to do with trade alone, Master B. It's 100% linked into AMP. through Nexgen Pro Trader funding. So it's not a standalone. It is designed for the funding company. Hey, I knew the answer. I love that. Great trend trade, Victor. What platform is linked to? It's directly to the broker. It's literally for the funding company. It is designed for Nexgen Pro Trader funding users to copy their accounts that are with AMP, to send that information to AMP to copy their trades. It's not available outside of the funding company. Nexgen did not get into the trade copier business, but John built probably the best damn copier I've ever seen for his funding clients. Does that answer that? So any of those platforms, if you were with the funding company, you could use the copier. Well, okay. So here, watch this. I like to type. Do I have an eval or semi-live with Nexgen Pro Trader funding? Yes, I can use the copier. No, I can't use the copier. That's it. So if the answer is yes, Master B, you can use the copier. It's built for you, the Nexgen Pro Trader funding user. If you don't, you can't use the copier. Does that work? Cool. I don't make recommendations, Sergio, because if you blow out your accounts, I don't want to be responsible for that. Don't want to be responsible for that. Now, that being said, affordable indicators, that's one for Pete. There is a free, I used it the other day, and I've got it in my indicators. Is that it? You use affordable indicators, Pete? I like it. There is a free, sorry, I'll get back to this chart 1 second. Little distraction is good. Free Ninja Trader copier. And then it's in the ecosystem. And I've got a buddy that uses this one, Sergio. And there's a version 2, so you may want to copy version 2 or Google version 2. I've got a buddy that uses this one and loves it. So it's not my recommendation. Whoops, what was that? Oh, that's just the picture. Okay. Not my recommendation, but I do have a friend that uses it. All right. When the smalls retrace at the divergence and large retrace at the fib, both rolled, but different areas. To me, it looks like the market is just confused and I did nothing. Maybe I've seen in the past. Maybe I've seen it in the past, but today I saw it. Whose is this? Who dropped this in here? Let's have a great talk. Jeffrey Dean, that's you. So where were you thinking of taking your trade? Right? So here, the trend was down, the momentum was down. It only had 2 triggers through. Don't bother, right? Here the market starts to go up. The small triggers are up, but the large triggers are down. Why bother? Here it tries to retrace right to support, nothing through. Why bother? Oh, right on. So perfect read. A weak confused bottom isn't a thing. And I think that this goes back to the idea of simplicity. Whatever you're looking at, it's a weak bottom, not confused, right? The same way, if this goes down, it's a weak top. Always go back to momentum path and entry. You'll be floored at how much thinking you don't have to do. But it's a great read. There's not a darn thing to do. Great read. I just find that less is more. Less is more. I could be a pioneer in the search of ballistic podiatry, or I could just shoot myself in the foot, right? One of them's easier to follow. 20-second trade, works out to 37,800 per hour. Strong bottom, momentum, directly into a termination condition with divergence, and just shoots the gap, hoping momentum carries. Good job. You want to be like John Daly? Drunk and good at golf? I like it. I like it. All right. Strong triggers, clear path. This trade, one of 8 lots. There's the entry, and there's trouble, and just quick profits. So Cindy, tell your husband that he traded directly into the termination, but with the system, you don't see it over here. So threading the needle. Triggers down, clear path, divergence, and it doesn't work. And one of the reasons divergence kills this trade a little bit is because if you carry that fib over, Cindy, are you in here? One thing, you guys that are using discretion, if you're trading the system and you're using discretion, Cindy, have you left already? Hopefully you'll get this message for your husband. Guys, if you're trading the system, but you're using discretion, right? You've shut it off and you're going to do it on your own. The system doesn't carry these fibs on the large chart. There are no synthetic fibs on the large chart, which means that this is not a clear path for the discretionary trader. This is a 50-50 trade with divergence. So guys, I love. So it's a weak top 50-50 trade with divergence. So Cindy, I hope that you got that, or you heard that, or you see it. But if you're going to use discretion, you've got to factor in these fibs, or you're going to lose a lot of trades like that. Strong triggers, clear path, perfect entry, easy money. Clear everywhere, all the momentum. So good bottom or termination? Well, first it was a termination, and then when it reversed the market, it became a strong bottom. First it's a termination, no more shorts, and then it's a strong bottom once it reverses the market. And do you see how there's just nothing in the way? And you have all the momentum, and it's like effortless. It's instant. It's just like boom, right to targets. That's the power of momentum and path, guys. No worries. So here, Cindy, give them this picture. Hold on. Give him this picture of how to define a strong bottom. First, it's a termination. So a strong top or bottom is first a termination, then it reverses the market. And it's important that you understand, Cindy, that at first it's a termination, which means if it had the potential to break, it can't be a strong top. If it reverses from the middle of nowhere, it can't be a strong top. It literally has to be no triggers through the termination that reverses. Not a clear path, 2 triggers through from a weak top, but with no divergence, you had a fighting chance, and down it goes. Nicely done. Not a strong top. I love it. Only 2 triggers through, right? So it has the potential to break, not a clear path. It has the potential to break. Does that make sense, Cindy? 2 triggers through? No, not okay. Does it make sense? 2 triggers through, 2 triggers still above. That's the potential to break. A clear path means that all 4 triggers got below the line. So with the potential to break, I want you to see how brilliant your entry is. You didn't sacrifice any momentum. You had strong triggers, You had no divergence. You made sure that your small chart gave you every bit as much momentum as the large chart because momentum breaks areas. Does that make sense? That's why if we backpedal to your husband's picture where he didn't have the clear path and the divergence prints, it's one of the biggest killers of those trades. You gave it the perfect entry. You gave it every chance to break that area. It's a beautiful, beautiful entry, but not a clear path. That's such an important lesson, though, because if you say to yourself, hey, this is only the potential to break, what you do is you get ready to manage, right? You're maybe not quite as comfortable as you would be with an actual clear path. So there's another picture for you. If you count triggers, it's only a clear path with 4 triggers through. All right, Miss Trina. First trade of the day, why I take my first trade on Sim. Same as not trading before the first cup of coffee. Amen. It's about warming my brain up. Should have seen momentum was not in my favor. So let's see. The triggers are down. You're on the strong side. There's room to trouble. Market pulls back, closes below. You get in after the close, and you get stopped out. Trina, it's the perfect trend trade. It's everything that you could hope it would be, except for one thing, Trina. You're in a big chart zone, and areas are bouncy. You're right in the thick of it, right in that zone. Rule number 1, not met. So it wasn't the strong triggers against you. It's that you were at something that could create a bounce. And that's why we warm up our brains. I like that you posted that. I have the same rule. I don't take a trade without a cup of coffee in me. And not even because coffee is magical, but because it gives me time to just wake up, to start thinking, to read my indicators. I won't even take one on Sim. All right, triggers are up. Transition. Pulls back to the area. There's your close above. And you entered at 54, so way up here. And just know where to go. And then Trina, 2 for 2. What are the dots? Was there a zone there on the large chart? No? Okay. Directly into the HVA. But Trina, do you see how they already got to their target? They already hit their midband, right? They already started down. You took the last shot. And that was just know where to go. Just know where to go. Should have gone to even money when you made your target. So that's good. At least you didn't lose it all. Up strong. Pulls back. Direct. Okay, the one-to-ones disappeared. So Trina, do you recognize this as a prairie dog? Because this bar turns this into resistance, 100%. I am very often in matters of chart reads because Trina, I'm not trying to catch a trade here. I'm just looking at something that's static. It's not moving. So you did trade a little fudging there, but Trina, that right there will save us sometimes. Sometimes that strong trigger up is one of the best blessings that we could have, being on the strong side of that trigger. And I'm glad that you got your targets made. That's awesome. And the only reason I ask is because if you take this trade, and let's go back and look at it one more time. And this is kind of what we talked about when Wayne was talking, when we were talking about management. Your initial stop is all the way down here, right? And that is, good Lord, 20 points. That's $400 per contract. And Trina, if you think your path is clear, you're pretty comfortable with $400 worth, right? You're like, hell yeah, this is perfect. If you're gonna prairie dog, whatever you're popping above, your brain's got to say, oh shit, I sure hope they don't come back below that area, because that's the area that could stop it. And sometimes you'll change your management plan a little bit. Nice trading. Good job. Another one. Triggers down, pulls back to the area, closes below. You're in at 04, and you're out at trouble. Absolutely beautiful. And you got the late entry, right? You're like, I wasn't there for it. Stupid bladder. And you just catch it on the pullback because that's where the entry was anyway. Nicely done. And they hadn't reached targets yet. So I know that you like these entries. If this hits trouble, that entry is off the table. Does that make sense? Because it already got there. The trade's done. But because it didn't, you just got a better price to get there. Nicely done, Miss Trina. Look at you, all confident. And then sometimes they're just beautiful. Everything says down, pull back to the area, close below. Not a care in the world. I bet that one was pretty awesome, right? And now that the money's real, you're tightening up stops for no reason. Get it in the bank, huh? That's normal. Yep. What did your chart say, though? Your chart said odds favorable, momentum down, and no hint of stopping. That's such a great looking trade. Such a pretty trade. But there's nothing wrong with getting paid. Nothing wrong with getting paid. And these get bigger. Oh, this was the one. No, that was a different one. Your holds get bigger with time. And I firmly believe if you're brand new into it, learn how to get paid. Learn how to put money in the account. It's not hard, I don't think, to make $400 or $500 a day with 2 or 3 trades, not going for home runs. Just accepting. Whoa, look at that. Ninja Trader went away. Just accepting that the next one's coming. It really does. It makes a huge difference. And just saying, well, you know what? It kept going. That's not my money. I got my money. I'll wait for the next round. Really good stuff, Miss Trina. All right, Nathan, let's see what you did. Guys should take a page out of Nathan's book. He's like, Mark, you said post in the room. I'm going to post them all. Almost there. I love it. And then Ron. And then Nathan. And then Victor, I know you snuck one in there. Don't let me miss it. There it is. Is that the same one, Victor? You put 2 in there that you were afraid I... Let's just do them both. Cool, no worries. Synthetics aren't on the chart, Robert. Your automated trading system does not use synthetics on the large chart. So if you are discretionarily trading that system, you've got to make the mental note that anything on a small chart belongs on that large chart. Nope. It won't still work. It's not the way it's designed. But the things that John Novak did by incorporating the small chart, man, this is awesome. Someone said they already passed an eval with it. You have all these lines on your small chart, and the automated system will now factor those in to decision-making processes, which is pretty cool. But it won't work with synthetics on there. All right, what happens if new fibs pop up in a way where it can act as a termination, immediate exit? Um, it has fully reversed, hasn't it? Good question. Thank you for saying that, Nathan. All day long, strong bottom, right? That's okay. How do we define the reversal? That's what we need right now. Large triggers roll from red to green. That's it. That's how you define the reversal. Once the large triggers roll, the reversal is in, your bottom is strong. You've got momentum. You've got to pull back to an area inside of triggers. And now let's see. These printed 15. It looks like the market may have already gotten above it before they ever got to it. It's hard to tell after the fact when they started printing. Okay, hold on. Let me read that again. Hold on. Is there a limit to how far away price can go to an area to treat it like that's an area that stopped it? Nathan, we've covered this 100 times, right? It didn't hit to the tick. How is a fib born? What creates a fib? Tens of thousands of calculations, right? It's a bunch of math. So if you are one tick off, you have to make a judgment call. Are you with me? If you are one tick off, if you are two ticks off, you have to make a judgment call. Nate, is it okay to let your small chart be the tiebreaker on that? Do you have strong triggers? Is there no divergence? Yeah, maybe I'll say I'll give it a shot, right? But look at what your small chart's telling you one tick away. The buyers are starting to push. So you will have to make decisions right in the moment. Hold on. And Nate, it works both ways, right? That's an exact line. They still get a couple ticks above it. Nathan, this software is freaking amazing. They still made it 6 or 7 ticks below. Like, if we could do it to the tick every time, holy shit. Couple ticks below, right? Couple ticks below. And that's why we go to the trigger lines. So if I am a tick off, for me personally, one tick is a non-negotiable. That fib is hit. That's me. 2 ticks is pretty darn close. But that's me. That's mine. That's not a rule. I guess what I'm wondering is, when do we say this is not a fib that was hit? Make up your own rules, Nathan. So until you're capable of doing that, if it's not hit, feel free to say it's not hit. And take a chance and see how many you lose into that area. And then you'll have some groundwork, something to work with. Does that make sense? Dave, can you hear me? Like, I'm not trying to dismiss it, but man, if you're a tick, you're there, brother. You're good. When people really start nitpicking, Nathan, and I don't think you are, but when people really start nitpicking what they're saying, Dave, give me a Y if you can hear me, please. Hold on. Dave, if you can't see or hear, try rebooting Discord. There we go. I know that you do, and I'm not saying this is you. Most people that are doing what you're doing right now, Nathan, are looking for ways to enter. They're not looking for strong tops and bottoms. They're looking for ways to try to get the last couple ticks out of a market. They're trying to say, man, I know that shit could stop the market, but I really want to be in a trade. And that's not what you're doing. That's not what you're doing. You're not saying, I want that short trade, right? You're using it, hey, is it really a strong bottom? So watch this. You want to know how to never mess it up, Nathan? This is not a rule. This is me pulling stuff out of my butt right here in the room. Start with that number and let me know how it works. Start with, if it is anything closer than 4 ticks, I'm going to consider it hit. How's that? Does that make you comfortable? And now you could say, this is Nathan's rule. Nathan's rule says anything closer than 4 ticks, I'm just going to assume it got hit. But if it missed it by 5 or more ticks, I might take the next shot, or I won't call it a strong top or bottom. So now what you've done is you've taken something that has a million possibilities and you've made it your own. You've made it Nathan's rule. Does that make sense? Sometimes we have to do that just for our brains, just to appease that part of our brain that needs that absolute. My thought process is, if I'm 3 or 4 ticks away and I see divergence, don't want it. Strong top, 100%, right? 1 tick off. Hell yeah, that's a strong top. 3 triggers through, pull back to the area, easy money. And yes, it still counts if it's there, Nathan. This divergence remains in play until it's taken out. Great job on this trade. Beautiful. And that strong top, 1 tick off, it's still the perfect trade. It can know. So once it's gone, right? When this divergence printed, that divergence went away. But recognize it, because they came back and printed another one from the same spot. When this one does, the software says this one is no longer needed. You know it's there, right? It's just what the software does. It's the same reason that this one is still printing. The software has a set of conditions to make those go away. Right here. Nathan, would it be okay to say, I see it, I know it's important, and even 2 bars later, I'll respect it. I don't know, that all went off the edge, right? You saw it, you knew it was there. The software just had a little something to make it go away because it doesn't want 2 of those right in the same spot. So yeah, you read it perfect. And that one right there could have easily ruined everything. So when you're wondering if they're relevant anymore, I like this. These are such good lessons. If you're wondering if divergence is relevant anymore, extend it into the great beyond. Extend that divergence into the next realm, right? And until large and small get below it, just pretend it's still in play. Just pretend it's still in play. You're welcome. Odds favorable, clear path, only 2 divergences. Your rules are met, right? Your rules are met. You take the trade. And then if you're in the trade, Nathan, you don't have to exit. This one doesn't fit your entry rules, but it doesn't change the expectations. You could still hold it. So this one fits your rules, and this one does not, right? Or you could exit at trouble. Well, if you really want to work on your management plan, stop trying to be a master manager while you're still trying to figure out stuff. How about this one? How about just follow the KISS plan? And with the understanding, you'll learn how to grow with that. You might say, and watch this, you're going to like this. I'm going to give you so much shit to think about, it's just going to confuse you. If that divergence keeps you from taking this trade. Can you use that as an exit condition? Because my rules say this divergence kills this trade. It doesn't fit the KISS plan. It could go way the hell down here. I'll exit my position. Does that make sense? I won't suffer a pullback. I won't suffer a pullback if I can't define the perfect entry somewhere before my stop gets hit. But Nathan, you're working on big move management before you even understand the small basics. And you've got a great grasp, dude. Your entries are phenomenal. Let's ask, Nathan, if you make $300 a trade on your winners, right? And you take 5 trades a day, and let's say you only win 3 of them. What is that, 900? And on the 2 that you lose, maybe you lose 200 each, and you're up 500 a day, and you're making $125,000 a year, keeping it super freaking simple. What are you worried about? What are you worried about? Love it. Just chill. Weed's legal in California. Maybe you need a little. Just kidding. Odds favorable, clear path, perfect entry. Beautiful. One trigger a bit through. No, this is not a good top. Has nothing to do with price, right, Nathan? Has everything to do with the triggers. Small triggers got through, which means that that area had the potential to break, which means that that area is not a termination, which means that that area cannot be a strong top. 3 divergences is a termination on the small chart. I'm going to absolutely refuse to make it complex. This is not a strong top on the large chart. Not for anyone following the KISS plan. How's that? Not for anybody following the KISS plan. So how about if we tailor your lessons for the KISS plan, which you told me you're following, instead of trying to find all the reasons to create exceptions? All the different things that can happen on a chart that can change your perception of something. Why not just say, hey, that's not a strong top? Where are termination conditions found first, Nathan? The large chart. Did you have one? No. Where are strong tops and bottoms defined? The large chart. So who cares what this one says? Who cares? What does 3 divergences do? Nathan, when you take this perfect trade, if you get 3 divergences right here, that's your termination exit condition. That's it. That's what it's used for. Boom. Guys, I love this. These conversations that you open up with your pictures are phenomenal. Odds favorable. Room, pull back to the area, pull back to the area, and now it's over, right? So Nathan, 2 opportunities to get up to trouble. Doesn't matter whether it was a strong top or a bottom because it's a high probability trade, right? Did it hit 3 divergences on the small or did it hit Fibonacci resistance on the large? How do you want to say it? Which one's easier? Boom. So Nathan, if you got paid right at that red line, you didn't wait for that 3rd divergence and get out 2.5 points lower. You said that's where the market may go. And it did, and it reacted instantly. The small chart, guys, will drive you freaking nuts. Because Nathan, you're hyper-focused on everything. It only takes 3 things, brother. Let it be 3 things. Odds favorable, clear path, kick-ass entry. No reason to exit, but who cares? Because you would have had your 300 already. 3 triggers through. Weak bottom. Perfect. Perfect. I love it. Guys, sometimes we just have to recalculate, recalibrate. Sometimes we got to remind ourselves that I don't need everything. That sometimes a lot of it's just noise. Odds favorable. Didn't reach the exact number, Nathan. Didn't reach the exact number. The no wiggle room 100% without question number. Didn't reach it. Not a termination. Price didn't reach the area. Divergences and one-to-ones are 100% exact calculations. Fibonacci is the only place where your number 4 comes into play. You're welcome. So check it out. Odds favorable, clear path, don't care about the first divergence, don't care about the second divergence, don't give two poops about the one-to-ones. Take your perfect entry and enjoy the spoils of your amazing chart read. Pretty cool, right? Do you feel weights coming off of your shoulders right now? I hope so. Yes, I love it. Guys, you have to ask these questions sometimes. It's in your number 4, right? It's within your number 4, Nathan? So what is your rule if it's 2 ticks off of the fib? What does Nathan's rule say? I love this. 2 ticks away says go for it. Go for what? The short trade? Or be willing to call it a strong bottom? There you go. So termination, there's your reversal. 3 triggers through. No divergence. Pull back to the area inside. It does go all the way to the bottom of the retracement zone because the midband's behaving as a termination condition. So technically, rule number 2 is not met. Because the midband is a termination condition, because the large triggers are a full bar away. You broke rule number 2, Nathan. Does that make sense? When is the midband a termination condition? Gap theory, right? Perfect trade. There you go. Where were they in the moment, Nathan? I know exactly where they were in the moment. This is why doing this after the fact hypothetical is just hypothetical. I know exactly where they were in the moment. They were more than a full bar away. But moving averages move. I didn't say that. I said you broke rule number 2. Remember when I told you you got to get out there and do this live? That's why. Because historically, they're not a full bar away. You beat the system by a tick. If you spend any time watching a live market, you'll see that these triggers move. Look at that. With every tick. Every tick. There's a huge difference between what you can accomplish in a market with absolutely nothing moving. Historically, you know where it went. Does it mean that it's not a bad trade? No. What it means is that you let it close the gap, that it is a strong bottom, that you did have odds favorable, that you could define an entry. Just rule number 2 is not met. And one day, Nathan, this might be your trade. But it's not KISS. It is not KISS plan, which means right now, it's not your trade. But here's the problem with what you're doing, lovingly, is you know that the market did that because you're not taking trades. What you're doing is you're going back and looking, right, to see if it fits the rules. And it does. It fits the rules, 100%. But this is me telling you that that would never fit the KISS plan in real life. Yeah. And while you do these, Nathan, one of the things that's going to be real important is because you're doing it historical, Anytime you see the potential to break and it turns into a reversal bar, circle it and go see what happened on the chart, because in the moment, that could have been the perfect trade that failed. So let me see if I can find an example of what I mean. Let me see if I can find a good trend trade that fails. This is a great example. See how you had odds favorable? See how you had a clear path? So when you're going back doing your study, Nathan, put a rectangle around that reversal bar down, because look, whoops. You already do this? Because that's the perfect entry, right? And that was an easy $300. And then a second divergence, no areas inside. So even though this trade fails, right, Nathan, there was money to be made on the first run. Good. It's important that you look at the fails too. Because I think what we realize a lot is that even on the fails, with good, pragmatic, emotionless management, there's still a lot of money to be made on trades that don't win. It's rare that trades just fail instantly. Man, these are great lessons this morning. I hope you guys are getting something out of this. Weak bottom, odds favorable, clear path, 3 divergences. No trade, right? Well, Nathan, it just can, right? Does it change the fact that this fits your rules in the moment, that you're focused on your rules, that I know you do. So Nathan, this picture fits your rules 100%, doesn't it? Without question. Absolutely. No hesitation. There you go. That's what practice is for. Making sure you understand what your looks are. Yeah, you get all the learning from this. But Nathan, what happens in a live market if those large triggers are a little further down? My question is, do you know that that's not the trade? That's it. Then that's perfect. Then all of your study is paying huge dividends. Great job. Termination, full reversal, not momentum at all. But the market is screaming up with room, momentum on the small chart, and Ron chili dogs it. Base hits, pay bills. Great trade, Ron. Great trade. Is there a method to determine how... Did we answer that one? Extend that line to the next county, and until the 4 triggers get below it, believe it has a role in your life. Cool? Just extend it off to the distance. You're welcome. That's a good question. All of these are great questions, Nathan. I really do. I love it. I love it when you rack my brain like this, because these are the lessons that 90% of the people in this room won't ask. These are the questions that they have, and they hope that I somehow stumble on that answer for them one day. Guys, everybody, take a page out of Nathan's book. This is how you get good at this stuff. Perfect trend trade, Victor. Down, room to trouble, pull back to the area, close below, out at trouble. I would sell that bill of goods to my grandmother. That is a great looking trend trade. And then you posted it twice. That's what we call impatience. I got you. Got you, Victor. Great looking trade, brother. Great looking trade. No triggers through, that's a termination. No triggers through, that's a termination. Colors don't match, that's not momentum. 3 divergences, that's a termination. Isn't that crazy? How you can go back to that core concept over and over to decide. I love that, OG. I love that. You know you don't have to though, right? Did you know that your notes, and I like that you guys take notes, right? That's pretty cool. There's my gift. Did you guys know that I took everything that I teach in this room and I put it on 2 pages in a Word document with every picture that you could ever need to be able to take these trades with confidence, to be able to learn these rules? And I like that you do notes, but when you guys take notes, make sure that what you're telling yourself is true. Make sure that what you're saying is factual, because what happens, oh no, did I close it out? Nope, we're good. What happens a lot, OG, and we talked about this, we hit on this a little bit earlier, where people say things like, all of my triggers are green, I must have momentum. And you don't. Price got above that 1-to-1, I must have a clear path. You don't, right? And even on the small chart, people will say things like, let's find a good example of a loser. I'm a loser, baby. Man, it's kind of hard. Market's been doing great things, hasn't it? I mean, my goodness, areas inside of triggers are freaking awesome. Awesome. Here we go. Where people will also say, but Mark, I took the pullback to the area, but the area is not inside of triggers, which means that that is such a likely option. So just make sure, I beg and plead with you guys, as you take notes, take pictures, and when you take pictures, compare them to the pictures that are used to teach this classroom. I give you guys the PowerPoint every day. I've got strong triggers. I've got a clear path. The only thing I don't have, I'm like right on the edge, and that's going to be out. Boom. Rule number 3 not met. Son of a gun. The recordings are good too. I like it. I love the fact that we can go through it. I'm telling you guys right now, with all of Nathan's hard work, this is going to be a good one. I can't believe it's 11:40. Let's see what happens when the areas are not inside of triggers. Maybe they'll push lower. Maybe they won't. I don't know. I don't have the advantage of rule number 3. I do have momentum. I do have a clear path. All of my areas are on the wrong side where the market shouldn't go. It's going to be hard to take an entry following the rules if the rules aren't met. Does that make sense, everybody? That's how quick you'll do your reads. When I told you you'll do it in a fraction of a second, you're going to realize that if you have to think more than 5 seconds about your trade, it's probably not your trade. The triggers are up. There is room. There hasn't been anything going on there. Triggers are up. There is room. Never got a pullback. That was a momentum trade from way down here. There's a lot of waiting in trading. John used to tell his classrooms that they're professional waiters, that they're not traders at all. I always thought that that was pretty clever. So how'd we do today? Did anybody learn anything? Did anybody get a little clarity on some concepts? Is anybody like, oh my gosh, I'm making this way too freaking hard? That's what most people realize, is that they're making it harder than it needs to be. But I am a simple man. All right, I'm going to kill